Okay, what is up, traders? What's up, tycoons? Today's video, we're going to give an update on natural gas. We're going to look at UNG, we're going to look at oil, but first, we're going to start off here with the natural gas spot price. This actually was a viewer request to start covering some of the spot prices of natural gas. So we're going to start off with that, and then we'll get into a detailed analysis of UNG and both oil. So make sure to stay tuned for the whole video. Smash the like button, subscribe if you guys are new. We're going to jump straight into it. So clearly the price of natural gas has continued to decline into the new year, but there's actually multiple signals that you guys can use that works on the price of natural gas as well as the tickers UNG and oil. So we're going to cover those, really go over some of the potential here. All right. So the first thing I want to highlight is divergences. So notice how we're making a high here, a high, a high, a high. Clearly, the price of natural gas was in an uptrend. But if you look at your RSI, which measures the relative strength at its given price, we can see we actually made a high, a lower high, a lower high, and a lower high. This would be known as a bearish divergence when the price is making higher highs and the RSI is making lower highs. It's an indicator of some bearish activity. What do you see? Big sharp drop to the downside. Okay. Now you can also combine that with the MACD to give yourself an even better, essentially have more confidence in your trades. If you take a look here, right, you got a MACD sell signal, which is going to be this blue line crossing below the orange line. Now, it doesn't always work, right? No strategy is 100% guaranteed, but when you combine divergence with the MACD, then you can have a lot more confidence. And as you can see in this video, it's actually much, much more effective, right? Like over here, we got a MACD crossover, and yeah, there was a small move to the downside, but here we made a high, and we made another higher high. Here we made a high and a lower high, so we have a bearish divergence on the RSI. Okay, the bearish divergence happens here. Very shortly afterwards, you got a MACD sell signal and the blue line crossed below, and we got a huge, huge move to the downside. Now, it's useful not only for predicting downside moves, but also upside moves. So take a look here. We have a low, lower low, lower low. So clearly, we're making lower lows heading down in price. But on our RSI, we're gaining relative strength. We're building relative strength. We made a low at this point, a higher low, and a higher low, right? So we're making higher lows on the RSI while the price is making lower lows. And sure enough, we got a big move to the upside. Now notice, just off of the initial bullish divergence, the initial low and lower low, and then the low here and higher low, we do get a tiny bounce. But just because you have these things doesn't mean that you're guaranteed to get a big move. But if you combine it with the MACD, right, we can see over here, we got the MACD to curl up and give us an entry signal also off of the bullish divergence. Now we had a bullish divergence right here, again, caused a small pop, but we really didn't get a MACD crossover. It hit the orange line and then it went back down below. It didn't cross up above, but here we got bullish divergence and we got a MACD crossover and we had a sharp move to the upside. And then what do you know? What happens again? We start making bearish divergence. We have a high, higher highs right here. We have a high, lower high, right? So now we're making lower highs, getting a bearish divergence. We get a MACD crossover, blue line crosses below the orange line. And what do you see? A big flush in the price of crude oil. Now, currently what we're doing is we're building bullish divergence and potentially about to get a MACD crossover. Remember, none of this video is financial advice. I'm not guaranteeing you anything and telling you guys it's about to go up or down. We're just going over TA and showing you guys how to spot the signals. Okay, so we have a low here, we have a lower low here. At this point where we have a low, and then we have a higher low. Now look at how many times we've already bounced off of this trend line. We've tested it a few times. The more times you test the trend line, the weaker it gets. So there is the possibility we could break and retest and head down lower into oversold territory, which is going to be 30 or below on the relative strength index. But currently we do have a bullish divergence forming based off of these lows, right? And we're heading lower and lower on the price of crude oil, but the relative strength index is building, right? We're building relative strength. The blue line is very close to crossing above the orange line. So keep a close eye out for that. If we do get the blue line across above the orange line, that could be your entry signal, as it's worked multiple times in the past using bearish or bullish divergence combined with the MACD entry signal. So now we've got the chart for oil pulled up. Okay, this is the natural gas leveraged ETF. As you can see, we do have a bullish chart pattern forming. All right, we have a falling wedge, descending wedge right here. In a perfect world scenario, you would see this break out and come up near the top of where this pattern began. Now we're looking for signals, right? We'll look here what we got. We have a low here, okay, and we have a lower low over here. So clearly, price is in a downtrend, but we have a low on the relative strength index and a higher low over here as well. Now, similar to, the spot price of natural gas, you can see here we've tested this trend line a lot. So we need to be cautious of a break below, as that could be a bearish signal. But not only do we have the bullish divergence here on the leveraged natural gas ETF, we did get a MACD crossover. Okay, we got a MACD crossover and we got bullish divergence, and we did get a breakout of our pattern. Now we haven't gotten a follow through, right? We broke out and we pulled back a little bit, but we're going to see if we can potentially come up to these three levels right here. Now, there's a reason that I'm using these three levels. These are the Fibonacci retracement tools. And the reason you use this is because nothing moves in a straight line down and nothing moves in a straight line up. You get a move down, retracement, continuation lower. That's how you spot trend continuation. Or you get a move down, retracement, and then you break through those retracement levels. And that's how you spot a potential reversal. So we've had a sharp move to the downside. If we do get some type of retracement, it could come all the way up. A healthy retracement would come up to 28.38, 34.33, and 40.28. Now, there's no guarantees. We could continue to head lower, but we do have a few things pointing to a possible bullish rally, right? We have the chart pattern, we have the MACD crossover, and we have bullish divergence on the relative strength index. All we need now is follow through on the price action. And if that happens, then we could see some good things happen here, right? So, if you take a look and connect basically these lows right here, what we'll do just to show you guys how the fibs really work, right? You see we have the move down, we retrace up to our 50% retracement level, and then we continue heading lower, right? That's trend continuation. All right, so we could, if we wanted to, I'm tracking more of the larger move to the downside, but we could adjust this to our most recent swing high right here, and this would give us some closer targets that we could come up to, right? So if we take it from this high and connect it down to this low down here, we have the move down, and we could retrace up to 2204, 2598, and 2992. I would say that these are probably going to be the targets that you want to look for first. But to get the larger reversal, right, that's where we got the initial fib retracement levels. Okay, so that's what we see on Boyle. Let's go ahead and take a look at UNG. All right, so I've got natural gas pulled up here now. I got ticker symbol UNG. But before we zoom into the recent price action, okay, I've already covered bearish divergences, so I'm not going to cover them as I usually do on UNG, as we've already given an explanation of how those work, and also bullish divergences. But I want to go over the major support levels that I found. All right, we had a support level here from the beginning of 2022, basically January 2022 lows. That was at 1167. Okay, that was a major support level we needed to hold. We were making 52-week lows, and I said, hey, if we break through this level, most likely we're going to come down and test our next level of 1031. Now, 1031 is over here, and this is from the May 2021 lows. We still have another major support level below this at right around 904, which we had a nice double bottom here back in March of 2021. Okay, so those are the major support levels to the downside, and just kind of giving you guys a visual on where they're from and why those are my support levels. Okay, but if we zoom in and take a look at the current price action, we can see that we've been tracking the fibs on natural gas on UNG for a little while. And it's doing exactly what I mentioned it does, right? You spot trend continuation or reversals with it. So we've had the move down, retrace up to 61.8% retracement level, continue down, right? And then we have the move down, we retrace up to the 50% retracement level, continue down. We retrace up to the 61.8% retracement level, continue down. So we're really measuring on UNG. There's three levels to the upside from our new high and down to our new low after we tested our major support level of, we have 1464, 1599, and 1734. Those are going to be our major retracement levels to the upside that we need to break through to get some type of reversal, right? Now, we do also have a descending wedge, a falling wedge pattern forming here that could cause a breakout. But before we get anywhere close to that, we have to break through these major retracement levels. Now, we'll zoom in a little bit and we'll take a look. And very similar to the spot price and also Boyle, you can use divergences to your side to really give you a possible indicator of future bullish or bearish activity. So here we see we have a low, we have a lower low. Okay, we have a low here, we have a higher low. Now, similar to Boyle, right? We've tested this trend line many, many times. We don't want to break below. If we break below, most likely we're going to come down and test our next support level and possibly even break through it. But we have the bullish divergence forming. I said to keep an eye out for a MACD crossover to the upside. If we zoom in a little bit more on the MACD, it's just barely beginning a crossover, right? So we want to see this continue. And if this MACD continues upwards, right, this blue line continues upwards and is able to put some space in between the blue line and the orange line, that may be an indicator of some possible bullish activity along with the bullish divergence. Keep in mind in the beginning of the video, no one strategy is perfect, but when you can combine a couple of the strategies together, a couple of the signals together, then you really have, you can have much more confidence in your trade, and you can set well-defined stop loss and risk management tools, right? Like in this case, I'm not saying you should take this trade or anyone should, but if you were to enter here, okay, and let's just say our major support level right around here of okay, and then you put a stop loss just below our major support level below it. So let's say you put a stop loss at 850 and you're targeting just the first retracement level, not even a major one, right? This is over a 2-to-1 risk to reward ratio. And these are really good ratios that you want to be taking in your trades. It's not going to guarantee a win, but your risk to reward is over 1, right? So if you're risking 1-to-1 every single trade and you're losing more trades than you're winning, then obviously you're going to have a losing ratio. But if your risk to reward is a 2-to-1 or a 3-to-1 or a 4-to-1, you can lose 1 or 2 trades, and if you win a trade, right, you're going to win more than you've been losing. So you want to find ways to find good risk to reward ratios. If you take this all the way up to your 61.8% retracement level, this is now a 3.78 risk to reward ratio based off of everything that I just showed you guys. So hopefully you enjoyed this video. If you did, make sure to smash the like button, subscribe to the channel. I know lots of people are down brutally on Boyle and UNG. Hopefully this video is going to give you guys, and has given you guys, some guidance as to what are some of the major signals that you need to pay attention to. Don't forget, you can trade these things to the downside, right? So when you start to see some bearish divergence, when you start to see MACD sell signals and you start to see the blue line crossing below the orange line, those are potential exit signals, right? And you could potentially enter some short positions to try to capitalize off of that. I know this thing has been down brutally. A lot of times when things are making 52-week lows, they will continue to make new lows. Now, that doesn't mean that they bounce first. So a lot of people are trying to play the bounce. You can play the bounce, but you don't want to get stuck holding the bag, right? Bag holding is a pretty bad thing that's kind of taken over society really since AMC, GME happened. A lot of people just end up holding on to the plays forever and ever. If you're already down 50% on your trade, you need to ask yourself why you're still holding it. First off, you need to have some type of risk management, some type of a stop loss, whatever fits your risk to reward ratio, but you don't really want to let the position go down 80-90% if you need to make a decision once you're at a certain point of loss, whether you want to reevaluate, maybe put some more money in, average down, figure out what price targets you're going to average down at, and then also just kind of figure out if you want to just leave the position alone and really let it start to develop and look for something else.